which is the largest and fastest growing underbanked business segment in the world. And we've been doing this for quite some time. We've moved about $100 million in capital into the market. We're on now we're on a track for the first billion, and we're growing very fast.
My name is Kevin David, and if you want real financial freedom for yourselves and for your loved ones today, then the time is now. And I will be there to help you every step of the way. What is up, guys, and welcome back to another exciting episode of your favorite podcast, or soon-to-be favorite podcast, the Kevin David Experience. Big shout out to everybody who's checking out the new YouTube channel. We're actually publishing a lot of our podcasts on our main YouTube channel with almost 1.5 million subscribers. So thank you to everybody who's been watching it there. And also our new YouTube channel, the Clips channel, right, where we're actually taking some of the most exciting parts of the podcast and posting it there. Big shout out, like always, to everybody on iTunes and Spotify and wherever you guys listen from. You guys are awesome. So I wanted to start actually shouting out a few people. Sean Kritzer gave us an awesome comment on YouTube. Taylor Brown gave us an awesome comment on YouTube. Rachel T from iTunes. Kara Lynn from Spotify. So thanks to everybody who is leaving us reviews. So today we have a very special guest, Sean Salas, who's joining us from Hollywood in the midst of the pandemic. So Sean, the first question that we ask everybody on the podcast is kind of to try to describe your entrepreneurial journey all the way up until right now in 60 seconds or less, if you can.
Ooh, all right, I'm going to do it. So I'm the son of an entrepreneur who immigrated from Mexico in pursuit of the American dream. And she opened over 30 restaurants over the course of her career as a restaurateur. And unfortunately, she did lose her business. And so at that point in time, my twin brother and I were 12 years old. And so my mom was devastated, decided to move back to Mexico from LA here, which is where I was born. And she thought the American dream was gone. It ended up being a blessing in disguise. I grew up in Mexico from 12 to 20 years old, re-immigrated to the United States, went to Berkeley undergrad, cut my teeth in investment banking and private equity. But, as I kind of re-immigrated to the US, I also had a very strong acculturation of my Mexican roots and always had a strong appreciation of also the lack of representation across finance of the Latinx and Black community. And so effectively that really translated into starting a company in finance. And Kenny and I, my twin brother and I, were lucky enough to incubate what today is Camino Financial while we were getting our MBAs at Harvard Business School. And now, since then, we've started Camino. It's been almost 7 years in the making, and happy to talk a little bit more about it.
Yeah, that's awesome. So did you and your twin brother go to the same undergrad and the same MBA program?
Yes, and we both did investment banking and we both did private equity. But rest assured, we married different women. and we are, but yeah, it's funny, we've shared this journey together, and I'm so proud of that in terms of having a lifetime partner other than my wife, if she's listening, and when she listens, but a partner in life that you can confide in. But at the same time, when people hear that at face value, they're like, wow, that could be unhealthy. These guys have done everything together. But in many ways, Kenny and I are the kind of twins that really like working together, but we're rarely in the same room at the same time. And we do a very good job splitting our roles and our responsibilities, even within the context of Camino Financial, so we can amplify each other. And so, yes, is it complementary? 100%. Is it competitive? Yes, it is, but in a very constructive way. And we've been able to build a business together as a result, and also to get into the same schools and be able to get jobs that have been very difficult to get.
Yeah, I was thinking the opposite. I think that it would be incredible to have a twin, because working with your family has like a really unique advantage where you kind of like trust them absolutely. I mean, depending on who your family is, but like with my family and good families, that people are fortunate enough to have. Having somebody that you trust absolutely is so valuable, right? Like it's such an incredible thing. So tell me about Camino Financial. Like, what do you guys do to a layman who might not, understand a ton about, financial companies and fintech and things like that?
Yeah, well, I'm happy to share with you that we a neo CDFI. And when you hear that, you're like, what the heck is a neo CDFI? It's a hybrid between a community development financial institution and a fintech platform. And what CDFIs are designed to do is to lend and offer financial literacy to the most underserved markets in the United States. And about $150 billion in assets are allocated into CDFIs, and people don't really know that. And $150 billion in the scheme of things is not a lot of money. That said, we are the first Neo CDFI in that we are applying at the foundation of, as a CDFI, technology to amplify the use cases of what a CDFI does here in the United States. And from that perspective, we're a first mover. What that effectively translates into in terms of output is more affordable capital to the most underserved small businesses here in the United States. We do have a focus towards the Latinx market, which is the largest and fastest growing underbanked business segment in the world. And we've been doing this for quite some time. We've moved about $100 million in capital into the market. We're on a track for the first billion, and we're growing very fast.
Nice. So in a sentence, and correct me if I'm wrong, you lend to one of the more like underserved markets for the most part, or do you invest in companies as well, or like what like how do you generally allocate the money? Where's the money coming from for people who don't have any idea how that works?
Yeah. So in the most simplest terms, we are a lender to underbanked small businesses. And our monthly payments translate to 40% lower payments relative to our competition in the small business lending space.
Nice. So I remember hearing about like a long time ago, and maybe this is totally different, but I remember hearing a long time ago about a company that was like doing like micro loans in like Africa or like somewhere where it's like not particularly useful. And then like I remember, thinking and having, they even mentioned in the article that people kind of thought that they'd never get their money back. Nobody would ever like make payments on the loans. But like what they figured out was like that company actually had like one of the highest, like crazy highest actual kind of loan repayment percentages because it had something to do with like recidivist, kind of like reciprocity and these people not having any other, bankers or loan people who would actually loan to them. And so they were actually getting paid back at a much higher percentage. Like what are your thoughts on all that?
Yeah, well, no, that model has proven itself out. There are a variety of different players out there. You may be referring to M-Pesa. And of course, Mohammed Yunus innovated a similar model or a derivative. Yeah. I would say M-Pesa is more of a derivative model in Bangladesh. And the short answer, and you hit it right on the nail, is that people that depend on this capital, because they actually do depend on this capital for their livelihoods, are more likely to pay you. It's simple, but people don't understand that. Why? Because on the face of the credit, they don't have any security or collateral. They don't have credit history. They may not even have a lot of paperwork to substantiate or give the bank or banker or the lender comfort that their ability to repay is there. And so there's an element of trust that's being placed when you understand a segment, a demographic very well. And I think at the base of what we're doing at Camino Financial, we're applying a similar level of trust to the underserved markets here in the United States. Now, we pair that philosophy, if you will, with technology that further enables us to reach more people, lower the transaction costs, because one of the biggest concerns around lending into markets is that we're talking about very small dollar loans. And when we talk about small dollar loans, it's hard to make money and charge an interest rate that makes sense. And so therefore, that's where technology can play a bigger role in being able to automate most of that process using then alternative data sets. It's not that you don't want any data, but to the extent you can get alternative data to underwrite the loan, then you can still make smart bets at scale with low transaction costs and make a return for all parties involved in the company.
So when you guys don't, if you like remove the human element for a second and just talk like strictly about the business aspect of it, and I know that's probably not how it happens in real life, but I'm just curious, like when you're making a loan decision, right? And ultimately you have to make like, tens, hundreds, thousands of these decisions, right? But you don't have credit history and you don't have, collateral. Like, what are the things that you're actually reviewing to make like an informed and intelligent decision from a lending perspective to have that comfort that you are likely to actually be paid back and be able to make profit as a lending business?
Yeah, so there are different ways of underwriting the underbanked. And one way, and this is not new to Camino Financial, this is fairly common in emerging markets. It just happens to be we have one of the largest and fastest growing emerging markets in the United States, which is the Latinx market. But in the context of, let's say, Africa as an example, it's very hard to track the cash flow of a business or micro enterprise. And they're really micro enterprises or solopreneurs. They're not like large established businesses. And so in the absence of that, what you could use is, for instance, try to track the costs of that individual, of that business. And then what you can do is create what's called the surrogate income model, where you effectively are implying what income is derived based on the cost base. Now, you can't apply that methodology in all markets. For instance, I can't predict the net worth of Warren Buffett based on the car that he drives, right? But as it relates to the underserved markets where there's very little disposable income, you can use that as a data point, for instance. Another example that I can give you is in emerging markets is Tala. Tala also based out of, well, now they're globally distributed, but they started in Africa as well. And in their case, what they did is they started using mobile information in order to derive different statistics on different segments and use that to drive credit decisions. And so I would tell you that technology in the new age of alternative data, big data, whatever you want to call it, is actually very exciting for a lender because we have more data on this. Like what Mohammed Yunus was doing was a lot harder than what M-Pesa, Tala, and now Camino Financial in the United States is doing, because we have a lot more access to data than we ever have. I think we're forward thinking in the context of using that data to drive credit decisions. And so in the context of Camino Financial, I was giving you more emerging market examples. In the context of Camino Financial, it's a little different in that we apply a hybrid approach where we do use the surrogate income underwriting model for certain segments in the market, in particular in the Latinx market, where the majority of businesses are micro businesses. We call them cash-based thin file micro enterprises. Okay. And so we need to apply that model in terms of deriving the cash. We also have access to Experian credit reports. Yes, 25% of our borrowers do not have credit history, period, case in point, right? But 75% of them do. And so we need to figure out how we leverage and disaggregate the data. I think there's a lot of people, and we don't use the score to weight our decision, but we can use the three bureaus database so that we can derive different credit data points in there. And then the third element of how we underwrite is just segmentation. And there's a lot of different segments that perform differently by industry, by geography, etc. And so we just need to segment appropriately, and based on that, we can weigh in a score. And we have a proprietary score that's called the Camino score, and that's what we use to underwrite our credit. And that's, once again, the nuts and bolts if you take out the human element of it, which is still very important, but
Of
to your
course.
question, if you take out the human element, because I do think a lot of this is based on trust, but if you just look at the numbers, you're able to do it formulaically fairly well. It takes time, but after about $100 million in loans, you get really good at it, and you know which ones are more likely to pay you and not, and you can price more efficiently.
Right. So two last quick questions, and then we'll get into the on the spot segment, which is fun. So doing the loans, right? You have to have the money to loan to people, right? So how did you guys go about getting that? Like, did you take a $100 million loan from somebody and then you just redisperse that? Like, how does that whole process work?
Whew, it would take me a lot longer than the 1 minute or so that I'm going to respond and answer that question. I'll give you the very, very short answer, which
Okay.
is no one gave us the money. What we did is we started as a broker, effectively trying to match make different lenders in the market because fintech has existed for a long time. And then and then specifically the alternative lending segment of fintech has existed since 2008, since the Great Recession, right? And so since then, uh, there are different lenders available in the market. And what we were doing is saying, let's see if the current emerging or the emerging ecosystem of alternative lenders do have the right product, and let's match make. And at a minimum, it enables us to learn a little bit. And so we did that. And what we found was that once we were getting to a certain scale, the matchmaking wasn't being as efficient. We actually saw a lot more opportunity to be a direct lender. At that point in time, we had raised $2 million in equity. And guess what we did? We said, I'm going to use one of the two and lend it out. And if people don't pay us back, we're out of business in 6 months.
Yeah.
And so talk about trust. You have to take the leap. You have to believe. And like, sure, we had a hypothesis on the scoring, but we weren't positive about it. And then eventually we started getting data points on repayment, and that eventually snowballed into growing into larger facilities and being able to get other institutional partners that believe in it based backed on data. And there are also there's like one publicly traded case study out there that's more focused on the consumer lending end called Opportune, but they do publish their credit performance data. And so, triangulating our track record with just a very close case study in the market eventually would enable us to raise larger pools of capital. And that's effectively what we do. We are a marketplace lender in that we originate and service loans on behalf of large institutional investors. Those institutional investors do bear the credit risk, but we're administering it on their behalf.
Nice. I like that. So this is a non sequitur, but how was Harvard at the MBA? Like, was it crazy, super competitive? I read a book a while ago called "What They Don't Teach You at Harvard MBA" or something. I forget the exact title. Was it worthwhile? Would you go again? Would you recommend it to people or entrepreneurs, or would you recommend? I mean, and obviously it's dependent on each person, but would you recommend it to most people, or do you think that just going out and starting a business is good, or is maybe a better alternative?
So it's an interesting question. I went to Harvard for 3 reasons, and none of them was starting a business, even though I wanted to start a business coming out of Harvard. I knew that, but I didn't go to Harvard to start a business. It's ironic, I know. And so the reason why starting a business while going to HBS wasn't one of my reasons is because I had heard that so many times over, Kevin, and I was convinced. It's like, if you want to start a business, then why are you going to HBS? And I had my 3 other reasons that why it was very important to me. And what I can tell you is that, boy, was I wrong about HBS not helping incubate Camino Financial. Just to give you some clear sense of how that translated, 3 professors invested in Camino Financial. These are professors that I can email, and they, within a day will respond to me and lend their time to me with like just to help. And I mean, that level of access to some of the biggest thought leaders in the world is unequivocal. You can't measure that in terms of value. Another data point that I'd like to give you: 80% of the people that initially seeded Camino Financial either were alumni of Harvard or were connected to me via a Harvard alum. Now, I want to be clear. That's not to say that you can't raise a ton of money and be successful in starting a company per that book, right? Without an MBA from a great school. No, I think the what I tell everybody is when you start a company, you need a crutch. You need a crutch. You need an unfair advantage, so to speak. For people, some people, it's joining this incubator, it's having this angel investor that's in the space, it's going to HBS and having access to these professors and also, people that are going to help you, like peers that are going to help you through the journey and connect you with investors. Everyone needs a different I do think to be super successful, everyone needs a crutch. Doing it by yourself, it takes a community to start a business and build a business and scale a business, right? Now, what that crutch is, it really depends. It really depends on your business and what works. And in my case, HBS worked.
Right. I love that. Cool. So let's get into the on the spot segment. It's like a series of 5 questions that are supposed to have 60-second or less answers. The first one is, what is the one book or mindset lesson that most greatly influenced your life?
So I will say I have a lot of books that I love. I'm just gonna pick one. Like the most influential in my life. I think there's a lot out there that have influenced different parts of my life. But I'll just name one in the spirit of entrepreneurship. I think Shoe Dog by Phil Knight is a great book, and I love them all. Right, I love all these autobiographies on different people like Steve Jobs, like Everything Store with Jeff Bezos. The reason why Shoe Dog differentiated itself a little bit for me is that Phil Knight is a great writer. He is a spectacular writer. And so when you're reading his book, it literally reads like a novel, number one. And number two, he almost ate it like a few times, like more than a few times. And like you see Phil Knight and his success today, and then you're like, oh yeah, but man, boy, that guy went through stuff. And I love hearing the tough stories about near-death experiences of your business. We all go through them. I've gone through more than a handful. I like to think I'm not going to go through any of them going forward, but you never know. Why? Because guess what? Building a business is hard. You need to be on edge, and I think Phil Knight captured that.
Love it. What tools or software or apps could you not live without running your business?
You probably hear this one all the time, Slack. I mean, Slack is just a great communication tool. I think COVID amplified the need for Slack in a big way. I think you can say the same about Zoom or Google Hangouts, but I think Slack it has so many integrated use cases into it, from file sharing to chat to video, if you need it, and we are we believe in hubs. So we have one hub in LA, another one in Mexico City, another one that we're gonna open up in Bogota, Colombia, which I'm actually really excited about. And it's really important that we have that constant communication, and Slack gives us that.
Yep, I love it. What's the worst advice most people listen to?
The worst advice most people listen to. I'm going to say the worst advice is, I think there is a misinterpretation that people that have achieved success it's somehow there was a breakout moment for them. And they look at some case studies of companies that have raised billions of dollars at multi-billion-dollar valuations in a relatively short period of time, and they start assuming that's the norm. And so while it's not advice, it's more the underlying assumption that if you do not have rapid success, that you're not going to be a success. And the reality is that if you look at some real case studies around a lot of companies, like even like Walmart, another good autobiography by Sam Walton, you realize that success is a long journey. And it's all about creating long-term, slow, compounding growth and solving a systemic problem. That's how you create real success. Overnight success, in my mind, isn't real. It hasn't been real for me. We're still grinding every day. We will be a multi-billion-dollar company, but when people hear this, and now, 5 years from now, I need them to remember that it was not overnight.
I love that. So last question, what does happiness mean to you?
Happiness means to me, that one's easier. There's a really good book I'm throwing out a lot of books now, by Clay Christensen. I believe it's titled How to Measure Happiness, or How to Measure Your Life, something like that. And he talks a lot about this, and not only what does happiness mean, but like how do you measure it? And I've actually put a lot of thought into it after reading it. And for me, happiness is empowering entrepreneurs that have been overlooked. It's empowering leaders that have been overlooked. I think that I have different platforms to do that. I think one of them is Camino Financial, by literally giving affordable capital to entrepreneurs that wouldn't otherwise not receive it, at least at the terms that I'm giving them at. And that will enable them to invest in their business, their families, and their communities. I think another way I do that is joining podcasts like this so people hear the stories. And so thank you, Kevin, for doing that. Another way of doing it is I do invest on the side. I meet with entrepreneurs every weekend. And so if you're interested, follow me on Twitter, Sean D. Salas, or LinkedIn, and shoot me a message, because I always like hearing stories, and I can't get to every request, but when I can, I certainly try to empower entrepreneurs through mentorship as well. And that's how I measure my happiness. And and then the fourth way actually, is my family. I have a young daughter. I want to empower her to be a strong, powerful woman and be the CEO or of whatever she wants to do in her life. And so, yeah, that's how I measure happiness.
I love it. So if people want to learn more about you or Camino or reach out, what's the best way to do that?
Yeah, so LinkedIn and Twitter are the best. I mean, I do have an Instagram. I'm fairly active on Instagram, but it's super personal. So if you guys want to see my pictures of my baby, all right. But my handle across them is Sean D. Salas. So you can find me on any of those three.
Awesome. Well, thanks for coming on the podcast, man. It was a great one.
All right. Thank you.